And here we are. Welcome to Ensuring Your Well-Being. I am Dennis James, the bike and dancing insurance man. And I have a guy named Victor V. We're going to be talking about life insurance, and a big focus with myself is John Hancock Vitality. All right. So you're going to get a little education on everything today. All right. And when I say that, it's going to be about life insurance. There's a lot of different options out there. And then Vitality, John Hancock Vitality is have another piece to it.
Dennis, thanks. Again, this is Victor Veprauskas,
Yeah.
and thanks for having me as a guest
Yeah,
host.
my pleasure.
I'll always enjoy hosting the podcast for you,
Yeah.
and getting a chance to sit in the host seat. And so that's us today.
Mhm.
But I will tell you. Let's start off with a little bit.
Okay.
I know that I think you did a podcast a few weeks ago
Correct.
that talked a little bit about yourself. But
Yeah.
again,
Yeah.
you are known as the dancing biking insurance man,
The
right?
Man, well, here's the deal. I did bike out to my brother-in-law's to watch the air show, which was like 35 miles.
Wow.
Yeah, you put the little bike in, you think those are really accurate, but took me off a couple miles. But, actually it took me into some swamps on a trail. Yeah, that was another story in itself. But guess what? I got there safely, and the air
Awesome.
show was great. But yeah. I've been in the insurance business for, it's almost scary. It's been like 30 years. It's a great business. And I always focused on individual and group health, life, disability, dental, and I've always promoted wellness. I had a calling about a little over 3 years ago, and when I was going through things with my mother and my mother-in-law with long-term care insurance and all that. But when I found out about John Hancock Vitality, that was a life changer for me because I can walk it and talk it.
Yeah, and that goes exactly to what you're saying is your active lifestyle,
Sure.
and
Yeah.
why you're so passionate about it. And it's
Yeah.
amazing to think that you've been in the insurance industry for 30 years,
Yeah.
especially considering you're only 29.
Yeah, the man upstairs, he's not done with me, Victor. All right, and if I can make a difference in people's lives, right? That's
That's
why I'm doing this today.
Yeah, that's awesome.
And there's a blessing behind that. And I can tell you, being in the business, right? And just like your profession, I've seen it all. Where I've walked through doors into a business, turned around, wrote life insurance, and 3 years later, all right, and I wrote disability income
And they're using
because
it.
he was a business owner,
Mm.
and I wrote $300,000 worth of life insurance. Nobody else was going to get him, but I was able to because of his business. And guess what? How important that was, because he ended up dying of cancer.
Oh,
So he had the disability, the long-term
care.
disability. And then he also had the life insurance, So things don't happen by accident when I walk through those doors. And there's a lot more to that. But, that's just the way it is. So, you may not, sometimes you got to question, we're in a profession to help people, right? Nobody wants to talk to, us sometimes, life insurance, long-term care. But the reality is you'll be glad you did. Your family will be glad you did.
Yeah, and I think someone once said to me, we're all just one doctor visit away from being uninsurable.
Yeah,
Right.
good health. You're right. Yeah,
And,
absolutely. That's why you shouldn't put things off.
And so today we're going to talk a little bit about life insurance.
Yeah.
I'm excited to learn about it as well.
Cool.
I get asked about them all the time, and even I have sometimes hard time remembering the differences. But so let's jump in. What are I'll say the different different
Sure.
types of life insurance available?
Okay. Yeah, term insurance, a lot of people know about term insurance. Is a great way to start because what happens is you get a lot of insurance for the money,
Okay.
right? And the levels, they usually go in levels, level 10-year level, that means it stays level for 10 years,
Okay.
or it could be 15 years or 20 years, or now even today, they've even built them out to where they're 30 years. So it's all
Wow.
based off your age and all that. But, there's it gets right back to, what can you afford? What's in your budget?
Okay.
If you leave today, you go to heaven, hopefully. You better hope you had some kind of life insurance, meaning no matter what age, especially if you're married and you have kids, you have responsibility. It's important. A lot of businesses will do it, right? They'll set it up for key man, estate plan, whatever, all those types of plans
Okay.
to protect, you know.
And then term insurance. So it's only good for a period of years, right?
Right. Then
And
sometimes you can convert it. You know, different insurance companies have conversion privileges. So,
okay.
as an example, let's say that you have a 20-year level term, and in number 18th year, you come down with cancer,
Oh,
or you're not going to
right.
get insurance, all
Right.
right? You're
Right.
uninsurable
Yeah.
because this particular company, depending on the carrier, you can convert it because they had conversion that you could convert all the way up to the 20 years. And some are,
And when you say convert, that means in
to a
essence.
permanent plan.
Okay, so you can just keep it going.
You can lock it in. You can
Okay.
lock it in. And you need to talk to your life insurance expert on that.
Okay.
Make sure, because that's
Life
important.
happens.
Absolutely. Life happens. And those can be renewable too. There's a lot of benefits to where you can renew them also.
Okay.
It's all about your health, though. They all look at your health.
Okay.
What's your health today?
So what is then a universal plan?
Universal. So that's more of what we would call a permanent plan, and universal is a flexible plan. You have flexible on how you pay the premiums.
Okay.
You can increase premiums, you can decrease premiums, you can skip premiums, depending. Usually not so much in the first year. It has minimum premiums you can put in and also maximum premiums in it. I mean, they're excellent from that point of view. So it is more of a permanent, or you could say terminate with that builds a cash value, tax deferred,
Okay.
right? So those are great benefits, like having another nest egg.
Okay.
And you have something locked in. As long as you pay the premiums,
Okay.
you don't have to worry about it terming out,
Okay.
right? Where that can happen with a term life insurance policy.
And I'm assuming would that be the premiums be more cost effective when you're younger versus when you're older?
Yeah, every year it changes. Every year it does go up.
Okay.
It gets right back to that whole procrastination. It's always better sooner than later.
Right.
Like you says, health can change a day at a time. That's just reality of life. We see it. We don't have to go far. Everyone has a story, and that's
Right.
just facts.
Yeah, that's right. Now, what about then whole life? How is
Mhm.
that different from
Yep.
universal and even term?
Yeah. Whole life is a permanent plan. They're excellent. Usually you'll pay a little bit more for them. Now, they will have it to where you pay, it could be, pay 10 years, pay
Okay.
15 years, where it's paid up.
Okay.
All right. It could be 20, 25 years, just depending. So those are what they call limited pay. So you pay it for X number of years, and then you don't pay for it anymore.
Oh, okay.
So that's, sometimes that's a great feature. A lot of these policies go to 121 today, or 121 years
wow.
old, thinking into the future.
Well, I think that's a testament maybe to the advances in science, right, and technology in the medical fields.
Yep.
Right.
Yep, a lot of that is in place. I think whole life's a great product. And there's certain carriers that cover it. Universal, but it gets right back to the basics. Something's better than nothing. You go with what your budget is.
Sure.
And if it makes sense, permanent's always better sooner than later. Just understand you do have conversion privileges.
So the difference, if I'm understanding the universal versus the whole life,
Mm-hmm.
the whole life you can pay for a limited amount of time, and then you're done paying premiums.
Well, that's more of a whole life.
Or whole life.
Yeah,
I'm sorry.
yeah.
And then universal though is you can pay. You're always going to pay, but you may have more of a premium or less of a premium. You're going to build cash.
Yeah, you're gonna build cash value, tax deferred, in either the universal or the whole life.
Oh wow.
You
Okay.
will. It's tax deferred, so there's benefits to it. You can take loans on it, that type of
Okay.
thing. If you do that, they're going to subtract it from the death benefit.
Sure.
All right, but sometimes businesses or people will use it for collateral, that type of thing.
Okay.
Usually the loans are pretty low, depending on the insurance carrier.
Right. So okay, we have each of the different policies or
Hmm.
types, right?
Yeah.
Term, universal, and whole life.
Right.
What are some of the different types of riders that somebody might be able to get?
Yep. Accidental death, that's a
Okay.
rider. Usually those are pretty inexpensive. Uh, everybody's going to feel different about that. Usually it costs less. I'm kind of a true believer in just having life insurance no matter
Okay.
what happens.
Right.
But there are needs for accidental death too. And you have to look at the costs and that type of thing. Does it make sense for me to have
Would
that?
that does that mean that someone would receive more
That's correct.
insurance?
They'd receive. So let's just say that they have a $500,000 policy,
Okay.
and they have that right, and they have an accident. They die in a car accident, anything accidental,
Okay.
right? No sickness. I'm
No,
talking
no, right.
accident.
Yeah, they trip
Yeah,
and fall,
yeah,
right?
yeah. It can happen, right? Boom,
Yeah,
you're out.
right,
You put in the death claim, and if it's accidental,
right.
they're gonna pay it.
Okay,
And so if you had 500,000, it'd be a $500,000 accidental death
okay,
payout.
okay.
So you're actually getting $1 million.
Oh, I see. Okay,
Yeah.
yeah. So that's because that's a rider on
Hmm.
top
You
of
got it.
your regular insurance.
Yeah.
Okay. What other type of riders would there be besides that?
There's disability riders. If you become disabled after a certain amount of time, so 90 days, 180 days, depending on the particular carrier, and where it'll start paying a certain amount of money based off you being disabled.
Wow.
All right,
Okay.
so that can have benefits to it. There's waiver of premium where they'll waive the premium after X number of days,
Okay.
90 days, 180. It just depends on the carrier.
Sure.
All
Yeah.
right, but when something happens and you're disabled, if something happens to you, the last thing you need is another payment.
Right.
And that's where those types of riders come into play. They have return of premium riders. Those are good. Usually when you're younger, when I say younger, young like you, Victor, 40,
I wish.
back in, yeah. So it all depends. You have to, you have to look at the cost of it. That's what you need to do. But a lot of benefits to that because you pay into, and some of them are on the term riders, which is pretty cool, right? So
Okay.
all of a sudden you get your money back that you paid into it.
I see.
And it's kind of like a enforced savings in so many words, right? You pay on it for 20 years, X number of dollars. Now you can get your money, and it's minimal tax deferred, that type of thing.
Okay.
So you get something.
Okay. And then you mentioned disability. Are there any type of riders that would help maybe for a long-term care situation?
Yeah, yeah, that gets to having life insurance with the long-term care rider
Right.
on there. So that's
Okay.
a great point. Yeah. So, what we're going to be talking about John Hancock Vitality, but a lot of the policies where you can get a long-term care rider on it. They have accelerated death benefits also. So that means if they said, you know what, you're terminally ill, Victor, and you have less than a year to live, well, they know they're going to pay out a death claim.
I see.
So you
Right.
can use a percentage of that death benefit
Now.
towards that because, might
Okay.
as well have the rendezvous while you can
Right.
because they know they're going to pay out the total death benefit,
Okay.
that type of thing.
Well, that is a
But
good.
I love how you mentioned the long-term care rider, and we'll get into that as we speak about Vitality.
Okay.
So we could probably get into that
Yeah.
because I think you pretty much covered.
That's a perfect segue to what
it-
we were talking
And
about.
you know what? It doesn't matter if it's John Hancock Vitality. Life insurance is life insurance, all right? And so that's what you really need to pay attention to. If you're an individual, you have a family. If you're a business, it's important to lock it in for key employees. It's a great group benefit.
Okay.
Okay.
That's awesome. Well, so let's do that. Let's explain to me what is the John Hancock Vitality insurance? Like, what is that? What
Yeah.
is that program? It sounds really interesting.
Well,
I know you're passionate about it.
Yeah, here's the deal. I have life insurance. I have life insurance with another carrier, but when I found out about John Hancock, that to me was very motivating because it is plugged into wellness. Their whole deal is if you engage in what they call vitality, and they've been partnered with Vitality, what's it been, 4 years, 5 years, right in there. Um, their whole deal is that when you engage, You're going to get it. They're going to give you discounts and rewards. You can get discounts up to 15% on your premium.
Wow.
All right, just by simply walking, going to the gym and checking in for a half hour. And then, so that's really kind of cool. And if you're a type 2 diabetic,
Okay.
depending, or you could be a diabetic, it all comes back to underwriting again because
Sure.
there is underwriting. You can get up to 25% discount.
Wow.
Yeah, I saved one of my clients over $1,000 a year with that, right? So, because he had a life insurance policy, and 25% become pretty substantial when you start adding that up. Right? And they give you all the tools when it comes to that, because they understand that when people engage in what they put in their mouth with nutrition, like
Right.
we save 25% when we go to Kroger's. But I remember being in Tennessee and we went to it's all related. They have thousands of them throughout the US,
Okay.
right? And
Stores, you mean?
yeah,
Okay.
yeah. So we right at the counter, you just 25% discount right
Wow.
there. Yeah, and it adds up. I mean, Sue and I are saving $10, $12, every time we go into Kroger's.
Sure.
And the truth of the matter, when it come to grapefruit, I didn't know how much I love grapefruit until I had to save the money, and I really like grapefruit. so, it can do that, and different people will use it for different things. So they'll do it because they want to engage with their kids, right? They want to be around for their children, that type of thing. I have this Apple Watch.
I see that.
All right.
Yes.
To me, it works. All right. I pay 25 plus tax every 2 years for my Apple Watch.
Okay.
I keep track of everything on it.
Okay.
All right. So when I'm going for a bike ride, going for a walk, wherever I am, and you get what they call points. Right. So when you go to the gym, as an example, you get 20 points.
And does that somehow track it? Then you got to turn it into the insurance company?
Yeah. Every 2 years, it tracks it daily.
Okay.
And you get points. Like when you hit 500 points, you pay 0.
Okay.
And it's very easy to do.
Okay.
It's not hard
When
at
you
all.
say you pay zero
Every month, it's you start at $15. And then it goes down to 12, 25, 720. I don't know. I just want to
for the
pay.
watch, you mean?
Yeah.
Yeah.
Yeah. And so at the end of the 2 years, I can get a new one,
Right.
which I do. And my wife is kind of the guru behind this. And I have a sister-in-law the same way, and including clients, right? And so that's kind of nice. So it keeps people motivated.
Sure.
That's what it does. It's to inspire people. A big thing for us, Victor, we save 50% on hotels with Expedia.
Well,
There's like 450,000 hotels. So when we're going to go somewhere, that adds up to thousands of dollars, all right, between each one of us.
So in order to get, if I'm interested in the Vitality insurance side of this with John Hancock,
right.
I would sign up for, let's say, a life insurance policy.
Correct.
And then do I have to turn stuff over into the insurance company to show that I'm actually engaged?
Well, it automatically will show you. The first thing you do when you get a life insurance policy is you take this health appraisal.
Okay.
All right, and that's good, right? You need to know what
Right.
who you are, what you do. How can I improve?
Okay.
So they keep it really simple. They want people to engage in it.
Sure.
All right. So what happens is after you take that, you get all these different points. It starts at bronze. All right. It goes bronze, silver, gold, platinum, and very easy to hit. They want you to, do the health and get a physical. You can get it from your doctor. You can go to these. What's all these
urgent cares?
Yeah, well, they're I can't think of the name of it, but either one you go to and you just upload and you send it to them.
Okay.
And you get thousands of points, anywhere from, depending on your health, what's your blood pressure like, that's what it is.
Okay.
What's your cholesterol? Hey, my cholesterol, so I need to do something about that, right? And then you do the same thing the next year.
Okay.
All right. So it's really a unique thing. I see it really helping a lot of people.
Sure.
That's their whole vision behind it. think about it, if you're a life insurance carrier, when people are living longer and living a healthier life, right, that means you don't got to pay out the claim so soon. Yeah.
Right. The life insurance companies are betting for us. In essence, right? They're betting that we're going to live.
Yeah. So it's
and us, the people who are the customers, are betting, no, we're going to die quick.
right. Exactly. Yeah. So yeah, and the thing about it is, it has different types of policies. They have term insurance, right? I talked about that a little
Yes.
earlier. So it's
Yeah.
the same thing.
Okay.
They have the same types of policies when it comes to term
So,
policies.
term, whole life, and universal?
Not whole life. Now they
Okay.
have universal life. So the universal is kind of unique. So they not only they have what they call protection universal life.
Okay.
Very safe. It's in John Hancock's general account, right? And those are great policies, all right?
Okay.
Because if you know anything around John Hancock, right, being around 160 years, and they sponsored the Boston Marathon because they're out of Boston. They're just really big like that. And then
do they have special riders then you can get with Vitality?
yeah. Yeah, they do. I did want to mention the protection UL, and then they have that with an accumulation of UL, which will accumulate a little bit more money, still safe. Then they have what they call index UL. So it's a universal index UL, and so what that is, it gives you a little more upside swing on the cash value side of it. So when the market crashes, you get zero. All right, but when the market's good, all right, it could be capped at, let's just say 8%, and they'll cap it up to 8%. And there's different markers on all that, all right? But there's flexibility, just like the other universal life policies I talked to you about.
Right, okay. And then the riders, though, because I don't want to forget about those. I know you mentioned a long-term care rider.
Yep, I mean, I don't want to get right into it, but when I say that, but yeah, I just believe in that because I know my wife and I are going to use one or the other. So that means anybody that has that's just reality. And then they have, so that you're going to use one or the other, all right? So if you use the life insurance, well, you got a tax-free death benefit for your loved ones.
Correct.
Now, if you use, let's just say you getting back to that 500,000 again, right? So if you use, 250 of it towards long-term care insurance, and the rest goes to your loved ones.
Okay.
All right, but it gets back to having a meaningful plan in place.
That's right. Yes.
And that's so important. Now, with Vitality, I wanted to mention this is how important and how John Hancock sees it. They see about 2 years ago, they came out with Vitality Go. So Vitality Plus, you pay $4 a year. All right.
Okay.
I mean, not a year. I'm sorry, $4 per month. I mean, it's $24 a year, something like that. But anyhow, the bottom line is, it's just cool. But Vitality Go means even if you don't want it, they're going to give people. You can buy up and spend the $24.
Okay.
If I don't know why. I don't know. I've never sold it without a Vitality Plus. To be honest with you.
Okay.
But everybody's different on that. They need time and that type of thing, and so because they believe in so much, and there's certain things you still get with it, even if you don't have the Vitality Plus. Right, so they'll give you like newsletters, and you get some discounts and all that. Right, it's just which is kind of nice.
What is the Aspire?
Yeah, Aspire is for I mentioned the diabetics where you can save up to 25%. So what they do is they'll give you tools and resources. They have what Undo is. It's called Undo, and it's like having a kit and resources for that. They're not taking away from what your doctor's saying or doing in any way, shape, or form like that, but it's just an added value. So it's a great benefit.
Right.
Usually when people are on these types of programs, when they engage, because we know it gets right back to what you put in your mouth, man.
Yeah.
It's just that and what's your lifestyle. And so they know, and that, You may not even be a diabetes, right? But you just have to take the steps,
What's
right?
the old saying? You can't out exercise a bad diet.
There you go, man. Yeah, yeah. And if you go off the wagon, well, you get back on it, man.
Right.
Like,
Yeah, exactly.
like,
Back on the bike.
yeah, yeah. And over time, it becomes a good habit.
And what is the Grail partnership with
Yeah.
Vitality?
So they came out with that. I think it was 2022, not that
Okay.
long ago, 23 maybe, but not long ago. But that just gets back to showing how innovative they are, right? When it comes to cancer detection.
Okay.
They can detect up to 50 different types of
Wow.
cancer when you have a blood test.
So certain markers in those.
Yeah,
Yeah.
yeah. So it gets back to prevention again.
Yes.
And at the same time, depending if you're a life insurance holder, you can get 50% discount, or they'll have where you don't pay anything depending on the size of the policy
Wow.
and that type of thing.
Yeah, that's great.
Yeah, it is unique. One of the things that helps people stay with Vitality is the rewards and discounts.
Yeah.
So what that means is that you get what they call spins. So I don't know. Now it's every week. I mean, it's just kind of crazy. My wife loves it. We have more Amazon discounts than.
That's where all the Amazon trucks are going in.
Yeah. She gets all these gift cards, right? And it's like, yeah, again, all right, sure. And then, right, so you get these spins, and what it does, it keeps people engaged in the plan. You can use it for Starbucks. You can use it as a contribution for a gift. Let's say a certain cause, that type of thing.
Nice.
I know that we used it for a show. It was $25.
Okay.
So all those things add up. They're it all matters. But it's because you're engaging.
Right.
And then they have what they call squares once a month. I won $250 on squares.
Wow.
Guess who spent that? Well,
Yeah.
Well, it was a combo, but
funny how that works sometimes.
Yeah. Well, hey, she's worth it.
There you go. Yeah, she's probably listening, so you got to.
I'll make sure she heard that.
That's right. So let's just summarize a little bit for
good
us.
idea.
What are again just the general 3 types of insurance plans?
Yep. So it gets back to term insurance, universal life, and whole life.
Okay. And the universal and whole life are more of a permanent type.
Correct. Yep. For sure. Life insurance is life insurance.
Yeah.
You have it for a reason.
And what are the again just generally the types of riders you could get, especially with like John Hancock Vitality?
Yeah. So it's a lot of the same ones I told you about. There's we talked about the long-term care rider. There's the critical care rider, which is really cool too.
Okay.
So that means not everybody has critical care, and what that means, if you have a heart attack, cancer, stroke, those are the big ones.
Yeah, sure.
It's going to pay out a percentage based off your life insurance policy. Okay. It's security, safety, and all those other things. They're not really that expensive. Either one of those riders I just talked about, or riders in general. Yeah.
So that back to what you were saying, that peace of mind.
Yeah.
It's so important.
Yeah. And one of the things I understand, because I've always been in the group market, the worksite market, those plans work for businesses. If you think about it, production, right? You want productivity.
Yes.
When you have a plan in place, and there's a lot of ways you can get your employees to engage in that. And you want productive employees, you want peace of mind for them if they need to. That's where that life insurance comes in. That's where the long-term care insurance comes in. That's where the Vitality comes in. Okay. And, I just know so many experts in the field, so I'm just able to really, if somebody needs a nutritionist, I mean, I know who they are, and, so these professionals that I deal with can help make that happen for a work site. And as we continue these podcasts, I'm going to be bringing on those types of experts too.
Yeah. And so I think from everything that I've heard today, and as you mentioned, being an estate planning attorney, the insurance side, though, again, you only know what you know.
Absolutely.
And it is so important for people and those listening, or maybe they have loved ones or family members, to schedule an appointment with you?
Yep.
Because you don't know what you don't know.
You got it.
And they might be thinking, I can't afford life insurance, but they could.
Right.
So how could they go ahead and schedule an appointment with you?
Yep. So they could go to variousinsuranceplanning.com. That's a great way to schedule with me.
Okay.
They could, if they wanted to call me, it's 248-393-3146. Schedule with me. Let's lay out a time, and I want to help people. I love doing business, but I promise you, I will do the right thing for you.
And I've heard you say it several times, this little bit of this podcast of, what can your budget? What can you afford?
You got it. That's what it's about.
That's awesome.
Yep. Just so that they have peace of mind for themselves and their family. So thank you, Victor. I'm so glad everybody joined us. I hope you learned a lot. And with that being said, make it a great day.